We detected an unusual trade worth $4.1 million on Walmart stock, ticker symbol WMT. And what's also very unusual about this is that Walmart reports earnings in a few days on February 20. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish and buying Walmart or bearish and selling before earnings. Because as we all know, the rich have more access to information, including leaked insider information such as earnings reports, to make better financial decisions. No wonder the rich get richer. And so that is why we track the trades of the rich on this channel. Now, with that said, if you've been following our channel, you know how profitable or rich we've gotten ever since we started following an unusual trade on Walmart about 5 months ago on this day, when Walmart was trading at $77 per share. And so ever since then, we've been updating our trade by managing risk, locking in profits along the way up as the stock kept going up higher. And so if you missed our previous video update on Walmart about 2 months ago on this day, when Walmart was trading at $95 per share, this was the video analysis we posted, in which we showed how we made 1,127% profit so far. And then we analyzed another unusual trade worth $4.3 million to predict whether Walmart stock would trade above $100 per share. And clearly, this analysis was correct because Walmart stock is now trading at $104 per share. And so if you want to learn more about how we did this, we'll put a link to this video at the top here. Make sure to subscribe and hit the bell icon so you don't miss out on these very profitable opportunities. Now, how much more profit have we gained ever since this last update? Well, if we traded the stock, you can see that it's gained another 10%. But since we traded options, we had the leverage to gain more. And so this is our options trade for the February 21 options at the 100 strike calls and the 110 strike calls, which coincidentally are the same options being traded as unusual option activity on the last trading day. And so we will be analyzing these options again in a few moments. And so you can see here that we now have a total profit of $1,166 per trade. And so to get the profit percentage, we need to divide by the initial cost of the trade. And so if we look back at the unusual trade we analyzed and started following about 5 months ago, you can see that it initially cost $79 per trade. If you missed this video, we'll put a link to it at the top here. And so to calculate the profit percentage, we have $1,166 of profit divided by the initial cost of $79 multiplied by 100 for a percentage, and we get a total of 1,475% profit. And so this is another real example proving how we keep winning with our data analysis and trading strategies. This success also highlights the importance of diversification in our investment portfolio. While some unusual trades may be losses, substantial winners like Walmart can make a significant positive impact on our overall net profitability, balancing out other investments and enhancing our financial growth. And so if you want to get access to more of these unusual trades to diversify your portfolio, then go to our website. We'll put a link to our website at the top here, where you can get access to better trade ideas that potential insiders and wealthy investors are trading. Now, with that said, let's analyze the latest data on a wealthy investor's trade to show how we updated our Walmart trade to manage the risk going into earnings. As we can see here on the options time and sales tape, the most unusual trades happened on February 14th at 9:54 a.m. at the 23-second mark. For these April 17 options at the 110 strike calls and the 120 strike calls, and the February 21 options at the 100 strike calls and the 110 strike calls. 22,082 contracts for the April 17 options. Notice that for the 120 strike calls, it is listed twice, so we can add them both up. 19,552 contracts plus 2,530, which matches the 22,082 contracts for the 110 strike calls, because they were being traded as a spread. Now, we need to be very careful with the 15,429 contracts for the February 21 options, because when we dive deeper into the data on the option chain, we can see here for the February 21 options at the 100 strike calls, we have an open interest of 24,026 contracts, which is more than the 15,429 contracts being traded. And at the 110 strike calls, we have an open interest of 22,195 contracts, which is also more than the 15,429 contracts being traded. And so, based on our analysis, this wealthy investor was closing these two options. This data is very important to figure out, because if a wealthy investor is closing their trade, it could indicate that it's time to hold off rather than start a new trade. And so we always take this extra step to analyze the data at a deeper level, because many other websites and scanners don't. They report all high volume unusual trades without filtering out closing trades, which leads to inaccurate results and losses for those following unusual option activity. And that is why we have more winning trades than other websites. And so, if we go back to the options time and sales tape, this wealthy investor was closing out of these February 21 options, which is what we did too, and rolling to a further date out. This means that these April 17 options are the new open trades. And so we can calculate the total cost of this new trade, the price of 2.51 subtracted by 0.61. Keep in mind that options are priced per share, so we need to multiply by 100 since each options contract represents 100 shares of stock. And so each trade costs $190 each. And since there was a quantity of 22,082 contracts, we multiply that out and we get a total of $4.1 million for this trade. But keep in mind, the earnings report is coming up in a few days, so this is a higher risk trade in comparison to the trades that we share on our website. And so if you want to get access to the lower risk and higher probability of profit trades, then go to our website. We'll put a link to our website at the top here, where you can get access to better trade ideas that the wealthy investors and potential insiders are trading, because not all of these unusual trades will be profitable. Some will be a loss. But as long as we diversify our portfolio with higher quality stock picks based on stronger data analysis, then we can become more profitable in the long term. Now, even though this is higher risk, we still traded this, but we use position sizing to manage our risk. As you can see here on the options chain for the April 17 options at the 110 strike calls and the 120 strike calls, since this was the new opening trade, we also traded these call options and got into the same position here. POS stands for our position, and the green color means a buy position, while the red color means a sell position. How did we know that these were the new opening trades? Well, notice that these options have an open interest of 5,555 contracts and 2,743 contracts, both figures lower than the 22,082 contracts being traded by this wealthy investor. In other words, it would be impossible to close out of that many contracts if there aren't enough open contracts available. And so, based on our deep analysis of many variables and other data sets, which we do not have time to cover in this video, this wealthy investor bought the 110 strike calls and sold the 120 strike calls. But we got a better price at $175 each because the stock went down lower after those unusual trades were made. And so, when we analyze this trade, you can see here on the risk profile profit loss graph where the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line here. And so when the purple and blue lines are trading above it, this trade becomes more positive, profitable, because this is a long bullish trade. And so if the lines are trading below it, this trade becomes more negative loss. But remember, in our case, we rolled our February 21 options with a profit into this new April 17 option trade. And so we need to calculate this profit into our new trade cost of $175 of debit. And so as we calculated earlier, we had a profit of $1,166 from our previous trade that we rolled from. And so we now have a credit trade of $991 per trade, which means that even if Walmart stock goes down after earnings, we will not have any negative loss because we've locked in more profits than the cost of our new trade. And so by managing our trade before earnings, we reduced our risk while at the same time, we could make more profits if the stock continues to go up higher. This is why we always manage our trades to gain an edge in the markets. If you want to learn more about our trading strategies and how we manage trades to increase profits, then go to our website. We'll put a link here. And if you missed our previous video analysis on Walmart 2 months ago, we'll put a link over here. And if you missed our first video analysis that started our Walmart trade 5 months ago, we'll put a link over here so you can learn how we made more than 1,000% profit so far. As usual, please hit the like button, subscribe if you haven't, take care, and have a wonderful day.